on the shores of the Rhine River, Manus Cranny. Manus, that famous interview you did with Mr. Amati years ago, you were younger, he wasn't, but you had him pinned against a wrought iron fence, and he couldn't get out of the way. What is Sergio Amati like as you've covered him over the years?
This man is very exacting. I dragged him out of a Bank of America conference. Orchel had just resigned. I phoned. I said, listen, what do you want to say to the market? He said, you know what? You're the most overpaid barista in London. Come, bring me a macchiato. I'll tell you a story. And he did. And that was his style. When Armati wants to talk, right, he will. Today's not the day. Today's the day for the Irish, Tom. That's me and Colin Kelleher, the chairman of this bank. And he's got a message. This is a long, bumpy road. And It was a message for Switzerland today, not for your side of the pond yet.
Manus, I've heard this before. 3 years. John mentioned 4 years out for Kelleher of Morgan Stanley, now saving the Swiss banking system. My answer is a guy like Kelleher always moves way faster than the published timeline. What do you expect and our banking team expect from UBS in the next 6 months?
Okay, let's put a couple of guardrails up around this. First of all, information is key. They don't have the full book analysis of what's inside the Credit Suisse system for about another 6 to 8 weeks. Then you've got to ask yourself how quickly will Armati, and Armati is the key here, because he is the man that downsized the investment bank at UBS. And his timeline is, I agree with you, Tom. I think the two of them joined at the hip in terms of understanding the risk that they must take and risks that they must execute quite quickly. And that is about getting that book down and having a message for Christmas to the market, which is we are well on our way.
The heritage here, Manus, is they've been through this 30 years ago. I believe it was 1997. Swiss Banking Corp took out UBS. They stole the UBS name and remodeled Swiss Banking Corp. What are they going to do with the two cultures here as they mate again like we saw 30 years ago?
It would be presumptive of me to say raise the bar, but hell, I'm on surveillance. Let's be presumptive. Let's raise the bar. This is about a culture within UBS, which Armati and Orchel and Narrative built, which is about risk management. You got a problem, put your hand up. Over there at Credit Suisse, it was a little bit more swagger from the street. It was about take risk, build the book, bring the business in. And there was a difference in terms of KYC, know your client, and the benchmarks were different. Not up to me to say whether they were higher or lower. They were different. So here's the issue, Tom, Lisa, and Jonathan, which is about do not presume that every dollar that is sitting over in wealth management in Credit Suisse is jumping up and over the bench into UBS. It's a different set of parameters, a different culture, a different climate, and that is the Armati era, which is about risk management and really keeping it tight.
And it's a timeline that potentially could extend 4 years in terms of the integration. What are some of the first steps versus the last steps, especially as they seek to retain talent amid potentially 30,000 layoffs?
Well, the first step, Lisa, good to see you this morning, is if people are already going. You got a pod, you got a group, you got an investment bank group that are on the move. They're already accepting bids. The good people, some people would say, have already left. This is about cherry picking and deciding which parts and pods of the investment bank you want to keep, which are the diamonds within the investment bank that you want to keep. But be very clear, the investment bank is the service side of wealth management. Now, when it comes to the other major issues, there's a huge political and social issue at play here. We're talking about 2-3 branches on the same street on Bahnhofstrasse, 2 UBSs, 2 Credit Suisses dovetailing both sides. You don't need that, and you certainly don't need headquarters in every single major country around the world. So the first issue is really getting the politicians and the country on board to allow you the latitude to really deliver the downsizing that's going to affect a lot of people, And Kelleher said another $8 billion, reaffirmed the $8 billion of savings today at this AGM. There's a big social dynamic to this, Lisa, as well as the bravado. Let's talk about investment banking, who we keep, who we let go. Right. There's a real side to this.
Manus, on a larger level, how much is this forced marriage, this shotgun marriage, possibly a template for other banks in Europe, or possibly a way to sort of move forward with what a lot of people say is a very overbanked region?
Well, a very overbanked region, and we've been spending years talking about when's the first major cross-border transaction going to come to heel. There's another 250 banks in this country, by the way. That's the issue. You've now just suddenly got one big beast, cherry picking. Oliver Crook, big shout out to the producer. This is his fact of the day, not mine. In Geneva, UBS and Credit Suisse are going to own 50% of the mortgage market. That is concentration risk. I think from an industry point of view, this is going to be one mother of a wealth manager. As far as investment banking is concerned, if you want to take risk, go to France. You want to take real risk, go to Germany. So, you know, I think what this, can I just leave you with this thought?
Yeah.
This is the most Arivest moment in the world for Armati and for Kelleher. Kelleher wants to go, you know what, guys? I'm not done yet. We're coming for you, Jamie. We're going to build this brutal beast of wealth management, and we're going to go head-to-head with the Americans. He talked about the book value here at the AGM today. That's what he wants. Kelleher wants to just dust one off for the CV at the end towards the Americans. And Armati is quite literally the Jamie Dimon of Europe.
Man, it's just one final question from me. I don't think that ultra-high net worth individuals bank with one bank. They have multiple banks. And let's say they were split across Credit Suisse and UBS. Now, all of a sudden, they're down to one from two. Perhaps they have others as well. Manus, with that in mind, is this good or bad news for Julius Baer, who can present themselves as some kind of alternative in Switzerland?
I think, again, the people who I met and chatted to yesterday on this very, very subject, which was just don't over-assume that everything migrates from CS, UBS into JB. But I would say that there will be pods of entrepreneurial-styled wealth managers. God, I'm generous with the flowers this morning. Entrepreneurial-styled wealth managers within Credit Suisse that want to go to Julius Baer. The Brits have got a good shout here as well. You've got Barclays there, but typically the Swiss and the Europeans, they don't migrate to your side of the world. They don't go to bank with the American institution. So it's going to be interesting to see where the money flows to. I think it could be a touch of the French and a touch of the Brits.
Interesting. Manus, this was great. Fantastic
Really
coverage,
really
as always, buddy.
Really
Bloomberg's Manus Cranny in Basel, Switzerland. The team out of Europe just done a phenomenal job. Manus, Francine, everyone over in Switzerland over the last couple of weeks.
This is Bloomberg does. When he pieced it together, it's a toxic mix of people
Toxic
like
brew.
Manus that have had a lot of different beats,
doesn't say
including
that. He's
Dubai.
positive.
Toxic brew. It's a toxic mix.
Describing our
But
colleagues as a toxic
No,
brew.
but Jan Patrick Barnett, he's got serious bank chops. Like he's actually worked. These are not like people going UBS. What's that mean? You know, what's it stand for? These are people with some deep, deep experience.
What did you make of what Manus finished on there?
I think.
Where does the money migrate to?
I think he's lights out. What I like the idea of this huge tension. Can the Americans gain in this crisis? Even gain in the United Kingdom, as Mr. Dimon has emphasized.
Gagi Chowdhury of BlackRock joining us shortly. Equity futures right now down about 0.1% on the S&P 500. Yields a little bit higher across the curve. Let's call it 5 basis points higher on a 2-year and about 3 basis points higher on a 10-year.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is like you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And like frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Hi, I'm Francine Lacroix. Join me on Leaders with Lacroix as we explore what drives the most influential people on the planet. Leaders with Lacroix on Bloomberg Television, TV Go, and Bloomberg.com.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
I think the theme that continues from last year into this year is one of uncertainty.
What's emerged is the link between rate hikes and a slower economy.
You throw on that now this banking crisis or the banking turmoil that we've had, and now you're talking about another layer of risk to economic growth.
I don't really think the consumer is about to fall off the cliff here.
We expect a slowdown, pretty substantial slowdown, but we are not expecting an outright contraction.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Seeing signs of that slowdown this week, that's for sure. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures down about 1/10% on the S&P. TK, the appetizer before the main event, the main course on Friday. Payrolls.
And the main event is more important than it was 2 weeks ago. All of a sudden, I would suggest Monday, maybe it was Friday last, Jobs Day has taken on a new importance. And one reason is it's the only jobs report to the May 3rd meeting. This is the last real substantial look at the labor market that this Federal Reserve gets.
It's about getting a decent understanding, Lisa, of what the condition of this economy was going into this banking stress. I think that's worth pointing out because I think we've also got to ask, after the banking stress of the last month, how redundant is Friday's number?
Well, and that's actually what John Authers was talking about, this idea that the JOLT survey was a bit of both sugar and caffeine, because it was sugar saying, okay, you are seeing the labor market loosen the way the Fed wants, but the extra sugar and the caffeine is that this is backward looking. It doesn't even counter in what we've already seen. So again, how much do people trade off a data point that's backward looking and that potentially doesn't factor in what we're going to see?
I was walking down the street yesterday in the first decent day in New York here on the edge of summer, maybe in the edge of spring even. It's been so cold, and I was thinking of the single most important thing, John, I've heard this week. David Kelly, JP Morgan Asset Management, looked for negative non-farm payroll prints out there somewhere. To me, that's the single most important thing this market isn't ready for.
Well, you've got to talk about the calendar, Tom. When? A month?
The when?
2
No,
months?
out.
3 months?
He made clear.
Andrew Hollenhorst, the City's talking about
4Q.
weakness that doesn't show up until 2024.
Yeah.
We mentioned this in the last hour, and I think it's important to go over. We spent the last 12 months talking about the long and variable lags of interest rate hikes. What about the long and variable lags of banking shocks? How quickly is this going to show up in the economy?
I think it's going to diffuse across assets, as you mentioned in the last hour. And I don't think it's a tip point, because we've been through this before, but commercial real estate, mortgage-backed, the land of Chris Whalen. The land of Chris Whalen is what I'm looking at. Derivative instruments in real estate investment in America, typically to the major regionals and the regionals and the smaller banks. I'm sorry, that is an exposure that to me is the follow-on of the quote-unquote banking crisis.
The ADP report comes out a little bit later this morning. Lisa's going to go through the data in just a moment. Here's a flavour of the price action for you. If you are just tuning in, welcome to the programme. Equity futures right now down about 1/10%, recovering just a little bit, though, on the S&P. Still yesterday, A day of losses, snapping a 4-day winning streak on the S&P 500. Longest winning streak going back to January, 4 days, believe it or not. This market's been so choppy over the last month or so. In the bond market, yields a little bit higher against the trend of the last week or so. 336.28 on a US 10-year. Yesterday, 2-year yields, Lisa, much lower off the back of that week data. This morning, higher by about 5 basis points.
And the fact that we saw lower yields yesterday amid comments from Cleveland Fed President Loretta Mester saying that they expect to raise rates above 5% and hold them there for a long time shows this credibility gap that seems to be opening up between the market and what the Fed is saying. Loretta Mester speaks again, although today with Bloomberg's own Michael McKee at 8:30 a.m. So interested to hear what she has to say, given what the market seems to be screaming. How much does she push back? On the geopolitical point of view, French President Emmanuel Macron is traveling to China. We also see that Ursula von der Leyen of the European Commission is going to be joining him. This, to me, is an interesting juxtaposition at a time when the Taiwan president is in the U.S. and is being met by House Speaker Kevin McCarthy. How much of a unity is there really between the U.S. and Europe when it comes to discussing and negotiating with China, given the differentials in reliance economically on that nation? And today on the economic data front, we do get ADP employment data that nobody cares about until they do. 8:15 a.m. Is it going to give us more of the same flavor that we got yesterday from that JOLTS data? And then ISM services coming in for the month of March at 10 a.m. Really curious to see whether we start to actually put more weight on JOLTS, where a lot of people said, this is a survey that is very messy. This is basically companies throwing darts at a board saying we need to blanket the field with potential applications because we're just not getting enough qualified workers. So do we get anything from this survey in terms of the trend in some of the other harder data?
Hey, Lisa, thanks for that. Looking ahead to that economic data a little bit later. And Lisa, thank you also for including Macron going to China. Tom, the chaos of the last month, the banking system here in the United States, I would say the drama of yesterday politically here in New York, there are really important things going on geopolitically. I think of China brokering a deal between Saudi and Iran, barely talked about because of the banking situation here. Macron to China, hardly talked about because of the politics here, but these are important issues.
Good time to mention this here. I think you're 100% correct. It's been a huge divergence. Yesterday was just nuts, the number of stories. Tomorrow, a conversation with Kristalina Georgieva, John, about just what you said. I will begin with China, and I will stay on China because it is the theme of the spring meetings and, frankly, on to the October meetings in Morocco.
And then Finland and NATO.
We did that yesterday.
These are kind of things, Tom, just kind of slip beneath the radar because we're so focused on these hyper-divisive issues in places here like New York. The drama of yesterday.
We did it yesterday, and I'm really proud of our team for picking up that video that we saw from NATO, as we saw Secretary of State Blinken with the leadership of NATO raise that Blue Cross flag, John. But I 100% agree with you that within the cacophony, we still have to look international.
We'll catch up with AMH in about 10 minutes from now. We'll pick up on some of that. Looking forward to it. Joining us now is Gargi Chowdhury, the head of iShares Investment Strategy Americas at BlackRock. Gargi, wonderful to catch up with you and good to see you, as always. Gargi, I think we all want to know just how much demand is there still for treasuries based on what you're seeing?
Good morning, guys. It's great to be here. And a tremendous amount of demand is what I'm going to say. So just looking at ETF flows for the first quarter, of the 74-odd billion that came into all ETFs, about 70% of that was in fixed income. And more specifically, what I thought at least was really interesting was that investors gravitated towards the highest quality parts of the fixed income market. So you were seeing investors move towards government bonds, towards treasuries, towards the very front end of the treasury curve, and then the belly, so the 7 to 10 year, something like the IEF, which gives you exposure to the 10-year part of the curve, had its biggest inflow ever. So investors definitely want fixed income here. They want the highest quality fixed income, and they want treasuries at these, well, not great yields, but better yields than it was about a year ago.
So, Gargi, within crisis and within fear, we need to find courage. What part of the ETF world is the courage need to be applied? Where should we be investing away from our full faith and credit fears?
Sure, Tom, you're absolutely right. I think investors need to stay invested. I think one thing we've learned, especially when we look at the price action in both January as well as March, where we wouldn't have necessarily expected the S&P to be up or the NASDAQ to be up as much as it was. So now where should investors go in this slightly volatile environment? We look at that in our second quarter outlook that we just came out with. Number one, think about quality in the equity markets and the fixed income markets. So within the equity market, that looks at companies that have strong cash flows, high margins, and really have the ability to have strong balance sheets. So looking at quality as well as looking at growth companies, not just tech, but all growth companies that are at a reasonable price. And that can be tech, something like an IXN, but also can be global energy companies like an IXC. So that's the equity side. And then on the fixed income side, you guys know this, I've talked about this on your show a bunch. We think that the new regime is one of you should be buying every backup in yields. I think we're in a generational opportunity for investors to get really high quality income in the fixed income markets. Today's yield levels, not fantastic. I think the Fed is not going to cut 2.5 times by the end of this year, but every time we get a backup, buy bonds, buy the front end, and when we get to about 4%, buy the ag.
And Gargi, certainly index strategies work very well when you're talking about broad bond indexes. But does index-based investing allow for the stock-specific type of analysis that you're talking about? Do you see investors starting to shift away from equity indexed strategies as they start to shift toward greater quality?
It's a great question, Lisa. So I'd say that obviously, I mean, this was a great month. March was a great month for inflows into QUAL quality tickers. And if we look at broad mutual funds as well as ETF industries, I mean, there has been an outflow from mutual funds as such, and mutual funds and ETFs when it comes to U.S. equity specifically. But I think the crux of your question is, you know, is there a role for both active as well as index investing for investors' portfolios? And the answer is absolutely yes. One of the things that I'm most passionate about is the fact that investors can add ETFs to their portfolios, iShares ETFs, hopefully in their portfolios. Active investors can do that to generate alpha in a really liquid manner in their portfolio. So yes, you can have your active allocations, but there is a role for ETFs for liquidity, for access, for transparency as well.
Gargi, just to pick up on some of the words you used, I think this is important. You called this a generational opportunity, which implies that maybe it doesn't stick around, that you have to get in now to pick up yield. But then you said buy the front end, which made me think, well, okay, if you're only buying the front end, you're not really locking it in for very long. Gargi, which one is it? Is it a once-in-a-generation opportunity or something that's going to stick around?
So I really hope that it sticks around, but unfortunately, every time what we've seen is as soon as yields back up to about that 4% level, we have investors, both from sort of institutional investors that are pension funds, insurance companies, as well as retail investors gravitate towards the ag, gravitate towards duration. So, you know, when we do get that back up, and I think we will most likely get a backup back to about 3.7 to 4% once some of this fear around the banking crisis has dissipated somewhat. So I think that it's a generational opportunity when we get that back up. But for now, you should still be invested in fixed income. So for now, I think allocating to the front end makes a lot of sense.
Gargi, thank you. Always enjoy catching up with you. Gargi Chowdhury there of BlackRock.
Absolutely.
On the bond market. Lisa?
I always love it when everyone's saying we're waiting for the opportunity to get in when things sell off.
Thank you.
And then they never sell off because everybody's looking for that opportunity and continuing to buy, just saying.
It speaks to that wall of demand in fixed income that Gargi started the conversation with, Tom.
Everybody's good. I mean, the caution out there is off the chart. What does that mean for equities? How do you sell equities into that gloom? Right, you know.
Well, you didn't in Q1, looking at the
Certainly.
NASDAQ, right?
And I believe we're still gloomy. I don't know. Somebody can correct me on that.
I think we've got to acknowledge that the data was weak this week. I think you've got to acknowledge that. And clearly the bond market traded on it, and equities too, which is new. Equity futures right now down about 0.1%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Donald Trump has denounced his indictment in New York as politically motivated, and he tried to link the case to grievances he has long deployed to hold sway over his supporters. The former president spoke at his estate in Florida hours after he pleaded not guilty to 34 counts of falsifying business records. Taiwan calls President Tsai Ing-wen's meeting with House Speaker Kevin McCarthy in the U.S. a rare opportunity. It may also lead to renewed military tension around the island. Tsai meets with McCarthy and other members of Congress today at the Reagan Library in Los Angeles. China has threatened an unspecified response. Voters in Chicago have elected progressive Brandon Johnson to be their next mayor. In a runoff, the Cook County Commissioner defeated Paul Vallis, a former head of Chicago Public Schools, who made crime the focus of his campaign. Both are Democrats. Johnson wants to raise taxes on major corporations to boost Chicago's revenue. France's President Emmanuel Macron is in Beijing, where he told the French community that China can play a major role in Ukraine. He also said he opposes moves to decouple the world's second largest economy. Macron has been pushing Europe to take a more moderate stance toward China than the U.S. And Johnson & Johnson has agreed to pay $8.9 billion to resolve all cancer lawsuits tied to its talc-based powders. The world's largest maker of healthcare products will also make a new attempt to contain the liability. Within a bankruptcy filing by one of its units, J&J hopes to settle complaints from about 60,000 plaintiffs. Global news powered by more than 2,700 journalists. I'm Lisa Mateo. This is Bloomberg.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. We zero in on March jobs.
A much anticipated jobs report.
The data are lagging and they are all over the place.
Fed tightening has consequences.
This Friday, it's a special Good Friday edition of Bloomberg Surveillance starting at 7 a.m.
What's the tea leaf I should be watching?
Do you think that this is an accurate response to the report that we just got?
You can't react to every bit of data.
The special Good Friday edition of Bloomberg Surveillance, Friday starting at 7 a.m. Eastern, leading up to the jobs report at 8:30.
Under New York state law, it is a felony to falsify business records with intent to defraud and an intent to conceal another crime. That is exactly what this case is about.
The only crime that I have committed is to fearlessly defend our nation from those who seek to destroy it.
That was Manhattan District Attorney Alvin Bragg with the former President Donald Trump responding to the indictment against him in remarks last night from Mar-a-Lago, Florida. Live from New York City this morning. Good morning and welcome to the program. Equity futures on the S&P 500 shaping up as follows. Equity futures look a little something like this, down 6 or 7 points. We're down about 0.1%. Let's call it down 0.2% on the S&P. Yields are higher by a single basis point, maybe even two, if we squeeze an extra one out for you. 335.53 on a 10-year, the 2-year. Then we all have to talk about what happened at the front end of the curve yesterday and the relationship between the bond market and equities. Lisa, the data was weaker. The bond market rallied. That makes sense. then something else made sense too, and it typically doesn't. The equity market started to weaken a little bit as well.
This, to me, is one of the biggest shifts, and if it sticks, this will be a tipping point where suddenly, weaker economic data is bad news for stocks, which was not the case earlier in the year. Suddenly, is there a question about what it will take for the Fed to come in and cut rates or even not hike, what that means for the condition of the economy?
Bad news is bad news.
I mean, we'll see how long this sticks. We've seen this before. We still continue to get pushback from Fed officials saying that they're still going to raise rates. The market keeps pushing back. And what do they get in terms of how bad the economic data gets for them to be able to, get with the market?
We don't have the time to dive into this right now, but it's a source of huge debate. And I would just say I have never seen, John, the navel-gazing of trying to get a Fed interest rate turn. Never seen it. I've just never observed clearly with an inflation out there that's sticky at 4%, where we're trying to model out the quote, when do they cut, when do they pivot, whatever language you want to use it. To me, it's absolutely original, the debate.
The market doesn't get to wait until the May meeting. Markets don't get to wait until the next dot plot. The market has concluded, a lot of people have concluded behind these market pricing, that ultimately what we've seen develop in the last month or so will lead to a disinflationary bust. It doesn't mean that's what's going to happen, Lisa. Just seems to be reflected in the price action of the last month or so.
And that's the reason why I thought that the Western Alliance statement was interesting yesterday. And I keep going back to the banks because the bank stocks really underperformed yesterday. So it was a departure from some of the recovery trade that we had been seeing. Western Alliance did not give guidance about how many deposits they continue to see flowing out. This is the question. It is not necessarily because of the weakness of a bank. It is because of what we're seeing with money moving and banks unwilling or unable to lend.
Right now, we're going to digress, and yes, we will go to the moment witnessed yesterday in Manhattan. She is in Los Angeles, which could basically be called Eastern Taipei, Eastern Taiwan. Far across the Pacific Ocean, Taiwan has moved 80,000 plus people into the nation, into California. It's a huge population in force in California. Today, there's politics there for balance of power. Anne-Marie Horton joining us right now. Anne-Marie, I want to get away from the Trump story and go to the McCarthy story here. McCarthy's meeting the leader of Taiwan. The symbolism is immense, and Beijing has noticed, haven't they?
Yeah, symbolism is immense because this is historic in the sense that we've never seen a Taiwanese leader meet a Speaker of the House on U.S. soil, and obviously he's the third-ranking highest U.S. official. And leading up to this moment, what we've been hearing from the White House is they're saying nothing to see here, basically. The Taiwanese president, Tsai Ing-wen, she is just transiting through the United States. She goes to visit other democracies in Central America and these meetings, but obviously this one everyone has been waiting for. It's the most controversial, and it is the one that China is watching the most. And they say they will respond in kind, and there will be consequences. So there is this potential that we could see a little bit of what we saw last summer when Speaker Pelosi visited Taiwan, and that was massive military drills, firing of rockets. But this likely will be slightly more muted because at the end of the day, it is taking place on U.S. soil.
Right. Anne-Marie, it's 6,800 miles from Taipei to Los Angeles. It's 100 miles across the Formosa Strait. What is the new military presence backing up Mr. McCarthy's meeting with Mr. Tsai?
Well, there's a huge Chinese military presence there. We know that, and they wanted that on full display during Speaker Pelosi's visit. When it comes to the United States, though, if you've been following the tea leaves of what Lloyd Austin's been up to, the Secretary of Defense, he's made a trip out to the Philippines. There was recent reporting as well. They were fortifying some military base and air base there in the Philippines. This is the U.S. new military posture, taking another look at how the U.S. has a presence in the Pacific.
How symbolic is it, Anne-Marie, that you have the Taiwanese President Tsai in Los Angeles, House Speaker Kevin McCarthy there to meet her, at the same time that you've got Emmanuel Macron, other European representatives heading over to Beijing to try to negotiate more closely with Xi Jinping? Is this potentially problematic, indicating some sort of fissure between the two powers?
Well, it's certainly an interesting split screen. As you can see there, because China obviously is against this visit from the Taiwanese president. They say there'll be consequences. And she is also, Tsai Ing-wen, is also not just meeting with Speaker McCarthy. It's going to be a group of bipartisan representatives. in New York. She also met with bipartisan senators. This was about Taiwanese security. There's a bill right now circulating in Congress about standing with Taiwan, being able to send more weapons, being able to send sanctions to Communist Party officials, as well as Chinese finance industry and companies, if the U.S. deems that China crossed a line and did, in fact, one day invade Taiwan. As you say, at the same time, you have not just Emmanuel Macron that is in Beijing, but also Ursula von der Leyen. You see the U.S. administration has been trying to get these European leaders on board with how they want to approach China. But at the same time, I think it shows that China's economy is so important for not just the U.S., which has massive trade with it, but the entire world, and critically for Europe as well.
MH, looking forward to your coverage through today. Anne-Marie over in Los Angeles this morning, not in Washington, D.C., on tour, following the speaker.
Balance of power on tour. It's going to be exciting going to the election. She and Joe Matthew have a little bit to talk about. And John, you were talking about the international affairs yesterday. The number of, not major, but the number of separate stories yesterday, maybe in 20 plus years, I've never seen. We had 7, 8, 9 things going on at once.
Well, here's an important
including our core coverage.
And Lisa, I'd ask the question that basically you were leaning towards. China talks about consequences. What are the consequences today? Have they spelled out those consequences?
Well, there was a report out just in the past half hour that Emmanuel Macron is saying that Xi Jinping is going to overreact to Taiwanese President Tsai in the U.S., that this is not going to be something in the forefront. Very difficult to know how you de-escalate, though, from here. And if you think about hanging out there in the back, TikTok and a potential ban, how do you place some of the business interests the U.S. has over in China with this increasing ratcheting up of tensions? I don't know how we get back down from this, given that it is bipartisan.
I went back and forth with Maria today on Brussels covering Finland yesterday, and we were talking about, well, they've gone through the party Congress, they've gone through the anointing of Xi as a lifetime leader of China, whatever that politics is going to be, and now is the micro-testing every day, every week, every month of the West, with many micro-tests of what is the new China going to look like forward. And I think you see that in the stew of visits and meetings, including what we're going to see next week at the IMF.
What are we going to see with TikTok? What's happening there? We've had the hearings, they've all got together.
I'm just not up to speed on it. Full disclosure, I just would like to get rid of it. That's my dad kind of thing.
Oh, you think it should go? That's your view.
I
don't have an opinion, but so let's get to the.
Look, I'm watching Instagram be. I'm watching Instagram. I mean, Lisa's more up to speed on this than I am, but Instagram has changed. Facebook has changed. They're all changing in reaction to TikTok. Do we ban it? I don't think we can ban it. I think it's delusional.
If you force a sale, what is the consequence? What is the repercussions over in China? And here, I just don't have any visibility in terms of Apple, in terms of some of the businesses.
That's what's going to happen.
Yeah, right. Exactly. That's the whole point. They can't because it's not there.
Precisely.
So then what do you do with Apple? What do you do with the other big tech companies that do a lot of business in China?
Please run the same wavelength. Thank you. Equity futures on the S&P, down 0.1%. This is Bloomberg.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
News breaks. No one covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of 3 very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021. And now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
Equities down yesterday, a little bit softer this morning. We're down about 0.1%. Good morning to you. Your broader market shaping up as follows. Equities down on the S&P, on the Nasdaq. We're down about 0.1% on the Nasdaq 100. If you look at the bond market, 2s, 10s and 30s shaping up as follows. On a 2-year, 384.79, up a couple of basis points. Down yesterday. Down in a big way. Crushed. Started the week at about 4.1%, backed away off the back of weak data. The ISM, job openings, factory orders. We'll get another ISM later, this time for the services sector. Looking forward to that. Your 10-year just sub 335. Let's finish on foreign exchange. Euro dollar. George Saravelos of Deutsche Bank talking up Eurozone exceptionalism for the right reasons. Lisa, for a long time we talked about Eurozone exceptionalism for all the wrong reasons. And now it's about Europe and why we should pay attention to the labour market data in the European economy.
George Saravello is saying that European wage gains are outpacing the U.S.'s for the first time in more than a decade, just to give you a sense of how unusual this is. And he's not alone with saying that Europe potentially holds more growth than the U.S.
So another 50 from the ECB and a pause from the Fed?
Okay, well then, when do we start talking about the extra 50 causing slower growth going forward in the ECB? But you're right, that's basically what you were asking when you were in London. How much are we going to see the ECB hiking more than the Federal Reserve? I want to take a look at some stocks that I think are really important to keep track of. Remember when we used to talk about banks? We are going to talk about banks once again because Western Alliance yesterday gave their earnings, and what they didn't give is what's spooking markets. They failed to give an explicit deposit balance, and people are wondering, what are you hiding? Those shares down 4.6%, and it speaks to perhaps not a lack of confidence in smaller banks, but just a lack of flows into them at a time when you can get yield elsewhere. What does that mean for lending? You're seeing PacWest, another one of those banks that was really struggling in the face of some of the jitters, down about 0.8% in sympathy. NVIDIA also is really interesting to watch because you saw Japan join with the West to ban certain chip-making supplies into China. And you see what is going on with NVIDIA, those shares down by 1.7%. We are not done yet with this trade war. We are not done yet with this ratcheting up, this escalation with respect to certain nations versus China. This, to me, is one of the most underplayed stories of this year. And, John, I keep going back to this, especially given that on the geopolitical scale next week, that is what the IMF, that is what the World Bank, that is what all of them are going to be talking about.
Next week is huge. I'm pleased you brought up some of these issues, particularly on the banking side as well, Lisa. Next week, First Republic earnings, I think, on the 13th. Then on the 14th, Tom, JP Morgan. On the 12th, I think we have CPI as well. And I might go as far as saying that maybe the guidance from the banks might be more important than payrolls on Friday and CPI next week, Tom, because there's going to be a sense in a lot of people, not everyone, but for many, particularly those that come on this program, who believe that a lot of this economic data is dated. It's about getting a decent picture of the condition of the economy going into the banking stress. To get an idea about what the banking stress will do to the economy, you've got to look to the banks for that.
The condition of the economy, to get the banks right-sized and straightforward, and then to see what corporations will do, John, as you mentioned, JP Morgan kicking off earnings. Maybe Federal Express is getting out from this. This is a bombshell from FedEx moments ago. I've got a raising of the dividend 10%. This is basically all hell breaking loose at our blue chip companies, John, as they adapt to this new world.
Do I sense some sarcasm there, Tom?
No, I think this is what I've been talking about, which is corporations with a vengeance will adapt to the cards that they're dealt, the things that we talk about back and forth every day in surveillance.
That stock up, Tom, a little more than 3% of the pre-market.
Yeah, we'll have to see there. We've got a wonderful guest with us. We're going to dive into the detail on FedEx with our team and get back to you with a full report in moments. Christina Catmany joins us right now, Senior Portfolio Manager for Global Debt at Invesco. I'm going to dovetail these two stories in here, and my question with all that you see at Invesco is, what is the level of flight to quality now? If it's flight to quality in April, are we all going to react, including the leadership of Federal Express?
Look, I think there is this, we had so much concern in this banking crisis story that took over the market really in March. When we take a step back, the macro underneath hasn't changed as much. And what's driving the Fed, and we obviously have to see the specifics from the bank and what's the tightening that comes as a result, but that's going to be a slow go and not something, we'll get hints of it from the tones of Jamie Dimon in his letter yesterday and things like that with earnings, but we won't have it in the nitty gritty data, and it's going to take a while. So we're left with looking at the hard data that we have and wondering if that can slow. And from a rates perspective, as you guys were talking about this morning, do we think treasuries themselves are super attractive? I don't know, 30s with the curve as inverted? Not really, but CDs, you can get CDs at 5%, and you can have some of these bank accounts at smaller banks if you have a level of comfort, and the FDIC has certainly given more of that to the market, are earning 4-5% too, right? So there is, right. I think there's that level of flight to quality, but I think some of the broader panic in the market has kind of come back a bit.
If we begin with the idea we're not going to return to the low rate regime of 15 years, whatever that timeline is, and we're going to go out to something new, it's not going to be what I remember in my youth, but it is going to be something different, which is a normalized high rate regime. How strategically does someone scared stiff play that event?
You know, I think we're in a different world, as you said, and I think it's hard to see. We've kind of shrunk the tails on both sides, whereas even coming into this year in January, there was the concerns of, do you have a Fed that can potentially go to 6 or 6.5 or 7%? And what does that mean? And do you have a corporate market collapse as a result? I think we've reined in that tail, and that's what the March event has done. And at the same time, it's really hard to see us going back to the zero lower bound because we're in a structurally higher inflation environment. So we're kind of navigating the middle. And I think we get, as investors, you get used to, okay, what are our options there? Risk-free assets become more interesting because they're not at the zero lower bound. You talked about Europe, and is Europe finally more interesting? Like the government bond world in Europe becomes more interesting just as a fact of not being in negative yields for the first time in years, right? For their home-based investors and central banks and whatnot.
May 3rd, Federal Reserve. How much information are they going to have to make a decision?
Again, not as much as they'd like, I'm sure. I think from the banking side, and look, I think the central banks, what we got from the policy meetings in March is this effort to compartmentalize the two issues and say, we have inflation as a problem, and we have policy rates to address that, and we have systemic issues, and we have our other special tools. And in Europe, it's LTROs, and here we had action from the Treasury and the Fed and FDIC and all these things. So I think that messaging from the ECB was a bit clearer and crisper than from Powell. But I think to get the information in the U.S., especially of what credit tightening has actually impacted the market from the banks, is just going to take time, and we don't have that hard data. And I think the Fed continues to pound the table that they are concerned about inflation, and they do not have tools if inflation is, they are more concerned with letting inflation get out of control. So it's a measured, like 50 is not on the table for the Fed, but should they and will they likely go 25? I think that's the case. And from there, it's about the data. payrolls is less important.
Yeah.
But the market's still looking for a 200 plus number, right? Like the economy to stay at steady pace is 75, right? Like you're still talking about running much above what the economy needs at a flat rate.
Elisa, 240 is the estimate for Friday. And to Christina's point, the Fed totally blurred the lines between the financial issues and the monetary policy objectives by saying that the financial issues were a substitute, to some extent, for rate hikes.
And actually reflecting that, as you pointed out, in the projections coming down about 50 basis points in terms of the median dot, which raises a question as an investor, if you're saying, a professional investor is saying, those CDs look pretty good, not what you normally hear from a bond investor. At what point can you go into riskier credit at a time when perhaps people are mispricing treasuries, given where the Fed is potentially going to go, and given that people haven't adequately priced in what it would take to bring down inflation?
Yeah. So I think we look at it in two senses. So the market likes to talk about, here's where Fed pricing is. So this is the direct path that the market's pricing. And we kind of look at it more of the market pricing is this bimodal, right? We have the scenario that the Fed, in fact, stays on hold close to the levels that they are for some period of time. And we think that that's a higher probability event. And then there's the tail on the other side, that things really do break and they have to cut meaningfully. And it's not that they may have to cut 200, 400 basis points similar to 01. So is our base case that they cut the 85-ish basis points that are priced into the market currently? No, that's not our base case. I think that's the tail, and I think that that's the divergence of how the market thinks about it. And you asked on something else too, but I think that
you're sitting next to me. You're allowed to forget what was said. Okay, if you're sitting next to me, you can.
Well, you just make up your own question.
You make up your own question.
That's what Tom does often. Don't worry about it.
But I think like that's the push and pull of where we go from here, of which is the path. And then from an inflation perspective, inflation's still running high. I think inflation bonds look interesting still. And we still think that the biggest, whereas we've said this before too, 2022 was a year of clear duration trade that you can make. I think 2023 remains FX as the primary market. That will be the mover and the transition mechanism of the divergence of central bank policy and what's the most interesting.
Underpinning that, when you joined us last time, you talked about the importance of the property market for foreign exchange. Commercial real estate, is it a part of that for you? Can you build an FX story off the back of what you think is going to happen with commercial real estate?
I think it impacts it for sure, and I think that there's different levels of importance in different markets. But I think, again, like you look at the consumer in the U.S., the consumer is such a large part of the market, and housing. I was listening, I think, to one of the Odd Lots podcasts this week, and they were talking about how the homeowner is the biggest political contingent and lobby in the market. And it's true, right? Like you have the consumer, you have these housing markets. So I think that story for the UK and Canada and Australia, that remains true and anchors that there are some real divergences between these markets.
Oh, particularly in the UK, where they would de-emphasize the equity market and say, I feel rich based on how expensive my house is worth.
Yeah.
Not whether I'm tapping into the equity, Lisa, just how expensive that house is worth. That's what I derive my wealth from.
Which is why the recent decline in home prices in the UK is so interesting. How much does that actually act as a tightening? That acts as a rate hike by the Bank of England. People are
confidence issues.
Exactly, but that's my point.
Massive confidence issues. Christina, this was great.
Thank you so much.
Thank you.
Thank you as always. Christina Campanelli of Invesco. Back to that real estate theme for you, Tom.
Well, yeah, I think there's any number of ways to go here on the real estate thing, and it's something we have to follow city by city. And yes, follow Blackstone. They're making the headlines. There's no question about it. But this is not going away. This is one of our themes.
8:30 Eastern time.
Yeah.
We'll get some data for you at 8:15, and then 8:30 we'll catch up with the Cleveland Fed President, Loretta Mester, with Mike McKee. Looking forward to that. Coming up in the next hour.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. From a New York courtroom to the campaign stage in Florida, Donald Trump has put his comeback bid for the White House back in the forefront after pleading not guilty to 34 counts of falsifying business records in Manhattan. The former president spoke to a crowd of supporters at his Mar-a-Lago resort in Palm Beach, where he called the indictment politically motivated. In Wisconsin, Democrats have won a majority on the Supreme Court for the first time in 15 years. And it comes as justices will consider a case that could determine access to abortion. The two candidates in the Wisconsin race spent $28 million, making it the most expensive state Supreme Court case in U.S. history. Ukraine's President Volodymyr Zelensky is visiting Poland, one of the country's strongest allies. Zelensky is discussing defense and economic cooperation, and he'll sign a deal on supplies, including armored personnel carriers. UBS Chairman Colm Kelleher says the integration of Credit Suisse will take 3 to 4 years, and that doesn't include the wind down of the investment bank. Kelleher is speaking today at UBS's annual general meeting. He says that even with protection in the form of Swiss government support, there's a huge amount of risk in the deal. And a new study says that Americans are spending less time working than they did before the pandemic. Some are spending more time on leisure activities, and that's led to a shortfall of labor. The study says it's equivalent to 2.4 million employees, and that adds pressure in a hot labor market that the Fed wants to cool off as it fights inflation. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. You know, lots of testing, lots of thinking about what could go wrong, lots of research. You know, when I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
It's more than an obligation to follow the law. Donald Trump has been a serial violator of obligations. The idea of norms, the peaceful transfer of political power. Obligations, though, are something citizens have to insist upon, and that brings it all back to the ballot box. The law, though, is something else, and we have a system for dealing with it. That's why we have courts.
Richard Haas there, the Council on Foreign Relations President, joining us in the last day or so from New York City. Let's check out the market for you. Equity futures down 0.1% on the S&P 500. Bit of news from FedEx moments ago. Tom, consolidating operating companies, raising the dividend big time. That dividend's going up 10%. That stock's higher in early trading.
My theme for this year is the great zombie roll-up, and part is that is winners and losers will adapt. FedEx has always been a winner, John. It's hugely important as a symbol of the logistics of America, and this is Fred Smith and his new leadership saying, let's go, take 3 units, squeeze it into one to do ever better. They're going to take costs out in that, and they give a nice dividend leap here to somebody who's actually had ample dividend growth over the years.
And accelerating the cost cuts as well, you'd think, Tom. At least this will enable them to do that. A little bit later, we get some data in about 30 minutes from now, actually. The ADP report, which we often refer to as the appetizer before the big one, the payrolls report on Friday. As Lisa said repeatedly through this morning, people line up to say you can ignore that. and then they end up trading on it anyway. So we'll see what we get a little bit later. Then at 8:30, just another programming note for you. Loretta Mester of the Cleveland Fed sitting down with Mike McKee after teeing up 5% and staying there through year end. The communication from the Fed has been pretty clear on this, Tom. Yes, they believe to some extent the banking issues are a substitute for hikes, but ultimately they don't want to cut and they want to stick with where they are.
And they're each different. Like, to look from Cleveland to St. Louis, it's not just that the Cardinals and the Indians look pretty good this year. John, these are some real distinctions between Bullard of St. Louis and Mester of Cleveland, but they're pretty much on the same page of what Susan Collins of Boston told Mike McKee. I'm sorry, we're data dependent. Get over it. We need to see the data.
The last meeting was too soon to make a call ultimately on how much the tightening means for rate hikes. I think they can signal to some extent and say it's a substitute. They can leave the dot plot unchanged and acknowledge they were going to lift it before, but after this we'll keep it unchanged. So there's something implied in that. But ultimately, Tom, it's too soon. And we've been asking the question May 3rd. Lisa, is May 3rd early enough? And we're told maybe it's too early.
Right.
It's too early.
The one thing that people keep saying is the Fed is more concerned about not going hard enough and inflation getting out of control than they are of overshooting and seeing a big decline in the economy. And that's
they just need to see the vectors come down. Service sectors, ever so slight. Goods clearly shows disinflation, but they're data dependent. I'm going to cut them some major slack. I think, Lisa, you're more critical about the pacing and the dialogue. And to me, the uncertainty right now is off the chart. I mean, it's literally off the chart. The uncertainty in Washington is off the chart as well. We had a huge response to the attendance on Bloomberg surveillance a few days ago of Michael Zeldin, to say he's a former federal prosecutor and at American University, Washington College of Law, barely describes his commitment not only to prosecutorial law, but to explaining it on TV. He's one of those people that comes on and is crystal clear. Let's go Law 101 here, sir. We did not see misdemeanors yesterday. All of the headlines today speak of felony. Explain the distinction for the former president of misdemeanor versus felony charges.
A misdemeanor is something less serious than a felony. The misdemeanors in this case would have been the mere entry of false data on the books and records of the business. However, they couldn't directly charge that because that has a 2-year statute of limitations, and this occurred longer than 2 years ago. So they had to figure out a way to make those misdemeanor business record false statements into a felony. And what they did was they said that that misdemeanor was undertaken for the purpose of promoting another crime. In this case, hiding from the people of New York the true intent of what Trump was doing, which they allege is to deprive the people of information that would have been relevant to their decision of who to vote for. Specifically, they paid 3 people, Stormy Daniels, McDougal, and a doorman, money to suppress their stories so that the voting public wouldn't know what Trump was up to in this sort of misogynistic way prior to the election. It's an interesting theory. We'll see how it plays out in practice.
We could talk an hour today, Michael, about this nuance. I'm going to go to what I witnessed yesterday in the silliness of microanalysis by non-pros like you of who held the door for whom. Did you see a normal process yesterday? Does it matter that we're analyzing who's holding the door for a given defendant?
Not at all. In fact, for a few minutes, I turned on the television and I heard that comment as well. And I thought, boy, they really are struggling to fill airtime because they expected this arraignment to take place more quickly than it did. That had nothing to do with anything of substance. The only thing that mattered yesterday was that Donald Trump was charged with 34 felonies. He pleaded not guilty. They set a next court appearance in December, and between now and then, there'll be a whole host of motions filed by Trump's lawyers to try to either change the venue of this case and or to dismiss it on various legal theories. That's what's going to play out between now and December.
But let's go to the media circus, Michael, because as a former federal prosecutor, how much do you have to factor that in to A, what you prosecute, and B, how you prosecute it, given a lot of interest in a given case?
Well, you have to be very careful about that. Every individual defendant is entitled to a fair trial, and you don't want to poison the possibility of that through a media circus. Now, I think the prosecutor is going to be very circumspect about how they proceed. I think they're going to try to rein in their witnesses, particularly Michael Cohen, who's an ever-present presence on television, which I find surprising. But I think that the biggest problem is going to be, can Donald Trump follow the admonition of the judge to try to temper his, I guess, commentary on the case? And yesterday at Mar-a-Lago, he seemed to have ignored what the judge said on day one.
As you see, Michael, how this is playing out in the media and how this is playing out politically with the Republican Party coalescing behind the former president, do you think that this case was a mistake by Alvin Bragg?
Well, it depends on what you mean by mistake. If you're thinking, was this a mistake to be the first case, if there are going to be other cases against Donald Trump? Maybe. It's not the strongest case. If you're thinking, what about accountability? Well, the president did all the activities that are charged in this indictment while he was a private citizen, before he was even elected president. And most people in that circumstance would be charged with this crime. When you ask your guests as they come on for future segments this morning, ask them if they were in their business and they entered falsely these types of records, would they fear being charged? I think the answer would be, of course, nobody would get away with that sort of business crimes in Manhattan. So it's accountability versus political strength of the media and the courts and the public perception, and I think I go with accountability.
Well, Michael, what you described, though, was the legal art of turning a misdemeanor into a felony from a DA that likes to turn felonies into misdemeanors. So, yeah. Michael, is that not somewhat concerning to you?
Well, you know, I got a direct message from a friend of mine yesterday saying she wished that he would be as tough on other types of crimes as he appears to be on Donald Trump and this type of crime. And I guess the point is fair enough, but it seems to me that if you believe that what the president did or the candidate did in order to win the presidency was a crime, then you bring that crime and you bring it for all it's worth, which is the felony charges.
Michael, thanks for being with us today. Thoughtful stuff, as always. Michael Zowden there of the American University, Washington College of Law. Tom.
I just love talking to prosecutors. And a number of the other networks had some brilliant people on yesterday, and you get a concision of thought there, John. And, you know, I feel like someone watching Perry Mason when I was 12 years old, and my mother would explain why Della Reese was, you know, that, you know, I'm a complete amateur. Lisa's way better at this than I am.
Oh, I think a lot of people have pretended to be lawyers in the last couple of days.
Yes,
I mean, I'm just sitting here asking questions, Lisa. I'm confused by it. Doesn't make sense to me. I'm totally on the same page as everyone who thinks that everyone should be treated the same as everybody, without a doubt. And you know the way I feel about the way senators and people in the office and American political institutions are treated in this country. I think they get far, far too much deference from the general public and the media, etc. We've covered all of that. But when it comes to this, Lisa, this doesn't feel like it's consistent based on this DA's approach to crime in New York.
He hasn't been particularly harsh with other types of crime, and he's come under criticism for that. This really goes to the heart of prosecutorial discretion, which is an art, not a science, and definitely is something people usually aren't as steeped in.
Well said, Bramo. As always, equity futures down a tenth on the S&P. Joe Quinlan of the Merrill and Bank of America Private Bank is going to be joining us shortly. In your bond market, 333, and I just got sight of Loretta Mester of the Cleveland Fed. Just down the corner of my eye, Tom. She's going to be with us in about 30 minutes' time.
So can you talk to us maybe about like how important data targeting or targeting of an audience actually is? Because I think we hear these things like, oh, it makes it harder for advertisers if they're not able to track your data. Why is that so important? And like, can you maybe give us some numbers around how valuable a targeted ad is versus an untargeted one? I don't even know if untargeted ads exist on the internet.
Oh, yeah. Well, and just on to sort of add on to Tracy's question, like, let's say I go to golf.com. Yeah. Okay. The ads that I get, like, how much is it? Oh, he's on golf.com. He probably wants to read about golf, as opposed to ads that I get that maybe, you know, the last 10 sites I went to is like pets.com or something like that. Yeah. And so how valuable is it for golf.com to be able to know that I also like pets?
I mean, there's all sorts of
open and unsolved questions about the value and precision of online advertising. The classic example is you go and you buy a pair of sneakers and then all you see are ads for the same exact sneakers, just following you around the internet, right? It's I just bought these. Why do you, the world's biggest tech companies that supposedly know a lot about you, can't solve that
You
problem.
bought one pair of sneakers.
Yeah,
you must
you
want
might want
more.
another one, right?
Well, I do, but I definitely don't need a second stone.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The slowing inflation scenario that you have in the U.S. gives the central bank the opportunity to slow their rate hikes.
The Fed's hands are now tied. They're in a difficult situation. The market's looking for cuts, but we still have inflation that is not fully behind us.
The markets are not believing what the Fed is saying.
Just like they were in unprecedented waters in not hiking in 21, they're really in unprecedented waters for not easing right now.
So it's really critical for the Fed and other central banks to be viewed as vigilant around inflation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on television, on radio, with markets on the move. Moments ago, John Farrow, that thing we've been looking at, the 2-year yield, it plunges down to a 3.80 handle. This is an abrupt move.
A little bit fast and loose with the word plunge, Tom, but I'll go with you. We're down about 2 basis points now on a 2-year after being higher by about 5 basis points. Lisa can't keep it together.
That was so gracefully done.
Anyway, I'll carry on. The data's been soft for the week so far. Whether you look at the ISM for the manufacturing, factory orders, job openings, and that's been driving yields much lower.
Right.
We started the week at 4.1%. Tom, right now we're at 381.
On a percentage basis, this is the way Stan Fisher, the former vice chairman of the Fed, would look at it. On a basis of back to that 4.1% level, John, it's a 9% move in yield that we've seen from 4.1 down to a 3.80. I take your point that we still have not broken through support. The volatility right now is so great. You ready for this? I need to see like a 355 to begin to get stressful. That's how bad the volatility overlay is on this bond market.
So let's work through the data, Tom. The ADP report in about 12 minutes' time, 13 minutes' time. Then it's on to the ISM services read a little bit later. Then it's on to claims and all that good stuff.
Yeah.
Over to payrolls on Friday. Then CPI on the 12th.
wages. I guess I got to go to wage growth. Somebody in Europe today, I'm sorry, I can't remember, folks, was talking about the wage spiral in Europe. Maybe we get wage indication that dovetails into what Mike McKee looks like, which is that service sector measurement of inflation. I mean, that's the only way I can link this in together.
Whatever it says, you can sit here and say, well, things have changed. We've got that banking stress. It's going to lead to tighter lending standards, which will ultimately will lead to softer growth. That's going to be the pushback we get on Friday, be the pushback we get next week when we get the CPI report.
Bloomberg with a CNBS article out moments ago here really talking about the issuance within the real estate market has come to a complete halt. And Lisa, that's really the story here, dovetailing your bond market expertise into the greater economy. There's a post-banking crisis tension right now.
Especially because it's not just because of weakness in the banks, it's because of the flow of money into money market accounts, as we've been talking about. And how is that going to restrain lending in all sorts of corners? Just to build on what you guys were talking about with wages, what you have seen is a softening in wages as well in the U.S. At least if you look at, for example, the wage growth tracker that the Atlanta Fed has, you could see that job switchers aren't getting as big a pop in their wages. But is that enough? And I think that that's what people are looking for. Is that enough at a time when you still have inflation running too hot and you still have kind of stagflationary ingredients, Tom, that are making people uneasy?
Well, maybe the stagflation's there, but again, I just think it's gross uncertainty. John, the one thing I'm going to look at is a 10-year real yield. Let's call it a grind. It's not a plunge, but it's grinding ever lower. I don't think the street is set up for an inflation-adjusted yield that reverts back from that healing good news that Jerome Powell wanted.
The market's made a call, disinflationary bust. We'll get some data on Friday, some data next week. I think it's far too early for the Fed to sit there in early May and make the call that they know what's going to happen here. Is June too early? It's July, it's August. For how long, Lisa, are we going to ignore the incoming information?
Well, you say it's a disinflationary bust. The bond market's saying that. But stocks aren't saying that quite yet, and they're starting to wake up to that. So at some point, that might actually force the hand of the Federal Reserve.
OPEC Plus out of the news today. Let me start the data check, John. Brent crude 86 level down to an 84.87.
Equity futures a bit softer here, Tom. We're only down 0.1%. Yields basically unchanged now on a 10-year. Yields were higher going into the ADP report. Now they're basically unchanged on a 10-year. The ADP report, Tom, about 11 minutes away. The ADP report, as Lisa has said repeatedly through today, that no one cares about until they do. And they often care about it a second after 8:15.
Yeah, I care about it. I care about it because they handle the paychecks of America. I think the new study they have is a little more granular and a little more authentic about what are those actual, in the old days, pieces of paper actually doing. Let's jump to it with Joe Quinlan here. Joseph Quinlan with decades of experience in the ups and downs of the market, head of CIO market strategy at Merrill and Bank of America Private Bank. Joe, I got to go to the news on FedEx today. You and I have seen this before, going back to Textron and Tenneco, and Link-Temco vote, if you will. We're one company, so let's split up into three, and then 10 years later, we're three companies. Let's combine back into one to keep everybody busy. Are we going to see more companies adapting to the post-pandemic world by strategic changes simply to reduce expenses?
I think they have to, Tom, given the fact that you're looking at more protectionism from the United States, Europe, of course, China, U.S. tensions as well. So companies are rethinking how they're operating, not just in North America, but Europe and Asia. And these redundancies are going to be built into the supply chain. We know that. So the key to what we don't know, how costly is this going to be? How long is it going to take? And where do the productivity gains come in? And that productivity gains come later.
Your hallmark is I think of Gina Martin Adams at Bloomberg Intelligence. Same thing. You got to be in the market. You got to participate. Joe, I'm scared stiff. How do I participate right now?
Well, Tom, you can be scared, but participate. Stay in the market. That's what we're telling our clients. Really, when you're building a core portfolio, you want to own companies in sectors that are growing, right? They're actually expanding, secularly, cyclically. So look at defense, healthcare. We still like energy. So there's places to put money to work in the market, in equities, and you can still sleep at night, and you can work your way through this chop and churn in the market. So that's what you have to do. You have to be in the market, though. You have to be in high quality, big companies, where there's growth in these underlying sectors.
A lot of people are talking about the growing divergence between bonds and stocks, with bonds calling for this disinflationary bust that forces the Fed's hand and forces them to cut, and stocks saying things are just fine, things are going to keep grinding along, and good news is good news, and bad news can also be good news. We are shifting here, and we are seeing a bit of an awakening in certain stocks to a potential disinflationary bust. Do you think that synergy between bonds and stocks will continue with stocks coming to the bond side?
Well, Lisa, it's a great question. We're going to know very shortly with the earnings season. So that's going to be very important, how companies come to the markets, tell us what happened, what's going to happen, how they're pricing, how their expectations. So, yeah, the equities seem to have a mind of their own, but the earnings reset to bring it back down to earth, so to speak, and have more bonds and equities in sync.
This is what Mike Wilson is talking about over at Morgan Stanley, and a lot of people are saying as well. But they said this in December as well, and then we got an earnings season that wasn't that great. People seem to gloss over that. Why was it not enough then to cause a sell-off, but it will be enough this earnings season?
Because, Lisa, because when you look at overall earnings per share for this year, they're still too high. They've got to come down. Savita, my colleague at Bank of America, she's at $200 this year. I think the consensus is $220. So we're, begrudgingly, we have to bring down the earnings estimates for 23, which then helps sets us up for 24. And I do think the markets are going to start pricing in better news for 24, but we're not there yet.
Look, Joe, we're not there yet. Well, as John Farrow just mentioned, we've got X number of Fed meetings to move away from uncertainty to find clarity. Where's the Quinlan clarity meter? Is it in the summer, or do we need to go to the autumn to find Joe Quinlan-like brilliance?
I don't know if that's ever going to come, Tom, but I think it's more, we got to move through the second quarter. We got to see what the earnings outlook looks like. And then we really need that confirmation whether wages you just talked about, are they actually coming down? Is inflation tracking lower in the PCE? So we're still a couple of months out in terms of really getting some hard data points that suggest the Fed is correct, on the right path, and there's no hiccups coming down the pipe. Well, there'll always be hiccups, but nothing out of the blue that strikes. So we're not there yet, but I think by summer we'll have clarity heading into 24, and that's going to be key for the market.
Joe, Mike Wilson of Morgan Stanley said this earlier this week, that he sees little evidence that a new bull market has begun and believe the bear market still has unfinished business. What evidence would you see when a bull market starts? Where would you look for it?
But John, I would look for the actual whites of the eyes of the recession, right? When the recession starts, typically, that's when that's when the markets bottom out, and then we begin again. We'll see the stocks move before the economy. So, we're looking, tracking for growth first quarter. Real GDP say 1.7. If you could tell me that Q2, Q3 we're going to be much weaker, negative territory, I would become more bullish looking in and beyond 6-12 months out for equity.
Okay. Joe, thanks for that. Appreciate the clarity. Joe Quinlan there of Merrill and Bank of America Private Bank. On the latest, it's so weird still, Lisa, to see Mike Wilson and Marko Kolanovic on the same page, isn't it?
I would agree.
It's so strange.
Which makes both people basically get lumped into the same category of people saying, they're always a bear, or they're always a bull, or they're always just extreme. I honestly think, though, it does indicate a consolidation of views around this sort of bearish tilt.
Much of last year, Lisa, you get that note from Mike Wilson on a Sunday, and then you'd wait sort of Monday, Tuesday time, and you'd be like, okay, let's get the bullish side of things from Marko over at JP Morgan. And Tom, that's changed. They're both on the same page. Marko this week said, we expect a reversal in risk sentiment and the market retesting last year's low over the coming months.
Lisa did surrogate Pharaoh here when you were out, John, with the plague, and Lisa featured Marco's work. No one cuts strategists slack like I do, because let me tell you, you can count the times. If ever someone says, Tom, you're so smart, just go, Tom, Brazil. I got Brazil. I got Lula. So wrong. So I'm going to cut these people some slack. We're out of a pandemic. We haven't even had time for it today. Richard Clarida with a brilliant essay in The Economist, and he says, look, it's all about an original supply-side shock that Marko and Mike and Joe Quinlan are still dealing with. I mean, that's all there is to it.
Can I just say this, though? I'll cut them some slack, too. It's a very, very difficult job to do. I struggle to cut slack for shops and houses that get it wrong and then don't offer you any clarity or transparency into what went wrong.
Exactly. Totally agree.
That's what I struggle with.
And yeah, I mean, I don't mean to interrupt here, but John, you're just hugely correct. And the major thing is you got to learn from when you're wrong. I mean,
Well, and explain the reasoning that led to it and how your reasoning is either shifted or doubled down.
I'll just say we got that from one bank and maybe not the other. Just going to leave that there. Cleveland Fed President Loretta Mester is going to join us in 18 minutes' time.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Donald Trump has denounced his indictment in New York as politically motivated, and he tried to link the case to grievances he has long deployed to hold sway over his supporters. The former president spoke at his estate in Florida hours after he pleaded not guilty to 34 counts of falsifying business records. Taiwan calls President Tsai Ing-wen's meeting with House Speaker Kevin McCarthy in the U.S. a rare opportunity. It may also lead to renewed military tension around the island. Tsai meets with McCarthy and other members of Congress today at the Reagan Library in Los Angeles. China has threatened an unspecified response. Voters in Chicago have elected progressive Brandon Johnson to be their next mayor. In a runoff, the Cook County Commissioner defeated Paul Vallis, a former head of Chicago Public Schools, who made crime the focus of his campaign. Both are Democrats. Johnson wants to raise taxes on major corporations to boost Chicago's revenue. Mortgage rates in the U.S. fell for a fourth straight week. According to the Mortgage Bankers Association, the contract rate for a 30-year fixed mortgage declined 5 basis points to 6.4%. Now, that's the lowest in 7 weeks. Still, an index of mortgage applications to buy a house decreased 3.5%. And FedEx is consolidating its operating companies into one organization to save money. The package shipper estimates that combining FedEx Express, FedEx Ground, FedEx Services, and other FedEx companies can save $4 billion. It's also raising its dividend by 10%. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
City, in London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
DOJ or other authorities
Could face bigger challenges next.
Was going to keep rate while this is a 3.
As the economic picture does. The OK is getting ready to make a decision.
Lisa with the line of the morning a couple of hours ago. We don't care about the ADP report until we do.
Now we do.
Now we do. Downside surprise. Mike McKee, what have you got?
145,000 is the number of jobs that ADP counted during the month of March, significantly below the forecast for 210,000. And the last month's number, which originally printed at 242, now they've revised that up to 261. Remember, with the payrolls number for the month last month, we came in at 311. Does it have any predictive power? Not a whole lot, but as one analyst put it this morning, guys, it's a jumping off point from from here to the payrolls numbers. People go back and look at all of their data. I think the ISM employment numbers for services are going to be more important at 10 o'clock this morning. But a quick look at the numbers here, and it's interesting. Construction jobs, according to ADP, up 53,000. Remember, construction was dead and housing was dead and all that. But they record a lot of lost jobs, 30,000 in manufacturing, which is, we've been waiting for that, and we did get a negative print from the ISM manufacturing numbers.
The construction lift is all working on John's remodeling of his kitchen. They're all in there.
That could be.
Was that the story when I was away?
Leisure and hospitality up 98,000, which would be interesting to see again on Friday, whether we're still adding that many.
Can I interrupt and ask a question here, which I think is really important for Wall Street?
Anyway.
John, yeah, thank you. But John, you're expert on this. The 2-year yield cratered 20 minutes ago, and now we're down even further, a stunning 3.78%. Did ADP leak?
I've got no information on that whatsoever.
I don't think it necessarily did, but you've got so many cross currents in the markets these days.
I'm just bringing it up. Asking for a friend.
I wasn't
here with you. What would I know?
I wasn't as down about the JOLTS data yesterday as the markets were. I mean,
well, I'm old enough to remember when that was the number we wanted from JOLTS to get the Feds back away. I just want to pick up on the price action briefly. 2-year yield was higher this morning by almost 7 basis points. It's now lower by 5 or 6 basis points on a 2-year. So that's a turnaround off the back of this downside surprise. In the equity market on the S&P 500, just a little bit lower, no drama here, down about 0.1%. But Lisa, clearly the story here is weak data, or at least downside surprise after downside surprise through much of this week, pushing through to a lower 2-year yield on the week so far.
Which goes to this question that Mike just sort of implicitly brought up, which is the market trading off a conviction, a narrative that they use the data to try to justify, and they pick the weaker aspects of it and not the stronger ones? Because yes, this is a number that most people would shrug off in any other time, but we are seeing 2-year yields slightly softer on yesterday's JOLTS data. On one hand, yes, the headline number coming to the weakest, going back almost 2 years, but the number of quits going up.
That was what really got to me. I mean, the data's old, but the Americans were still confident in their job prospects. And here's a bit of data out of the ADP. They now do the jobs, they do pay numbers for jobs. And job switchers saw a 14.2% increase in their incomes in the month of March. That's on an annualized basis. Job stayers, 6.9%. So ADP still finds wage pressures out there.
I think we've got to remember the nature of the market we're in right now. And Mike, I think you can speak to this. This data is about getting an understanding of the condition of the economy going into the banking stress. And for that matter, I think a lot of people are willing to ignore any sign of resilience and embrace signs of weakness, because that's ultimately where the bias is at the moment. They believe that's where we're going.
Yeah. Well, that's why it'll be interesting to see what happens on Friday with the jobs numbers. If the jobs numbers are strong, does that cause a Wall Street rethink? It's not going to cause a Fed rethink, and I will bet you right now I'll do a Karnak the Magnificent forecast on an answer we're going to get. Tom will explain that to you.
John Carson about 12:10 midnight, I would say.
But if I ask her, have you made up your mind? I'm sure she's going to say we're waiting for the data. And it was like Jim Bullard told me on Monday. Right. He said, we don't have to make a decision until May 3rd, so why would we, given all the data that's still out there?
The insight, Mike, I've had in this hugely uncertain blur, and your great work, may I say, with the Federal Reserve of Boston, of St. Louis, a Cardinals game you went to, was I actually was watching the Cardinals, looking behind home plate
to see if you could
see if you were
I don't
Bullard
get paid enough.
seats.
No, you're the only one that can sit in those seats.
And now Cleveland, but you're really working these smart people on what they're doing. And to me, what's time stood still was David Kelly over at J.P. Morgan saying we are going to see negative non-farm payrolls. How does Loretta Mester's world change if we get 1, 2, dare I say 3 months in a row of negative non-farm payrolls somewhere out there?
Well, I don't see that happening at least in the short term, but if it did happen, then we would definitely be having the conversation about rate cuts, because if you were seeing jobs lost on a significantly sequential basis, it would tell you the economy is in recession.
What John was just talking about, and this is, I think, is really important, that people believe that the data is all backward-looking that we're getting now, and that it sets the stage for where we're heading because of tighter lending conditions. Is that how Fed officials look at it? Are they going to speak to that in not only the meeting, but when you talk to Loretta Mester in just a couple minutes?
Yeah, they know that the data are the rearview mirror, essentially. They're looking at all kinds of data. There are more timely private sector data sets that they're looking at these days and that the government is using. They have incorporated some of those into the BEA and BLS numbers that come out. But they know they're looking backwards, so they have to extrapolate forward. The big number of the ISM services, core services, ex-housing, that's in the Conference Board's index of lagging indicators. So while that is an important number for them, it is not something that is particularly timely at the moment.
We've got to get to the balance of risk question, Mike. There's been a belief for much of the last year that the risk of doing too little outweighed the risk of doing too much. Given the nature of the shock in the last month, does the risk of doing too much now outweigh the risk of doing too little?
Well, that's a good question for President Mester that I can put to her. I think that they would have told you at the last Fed meeting, Jay Powell would have said that the balance of risks is very finely balanced at this point. We don't know, and they don't know, whether we're going to see a significant tightening in credit because it had already happened. The last senior loan officer survey out in January showed 43% of the banks had tightened their credit standards. So do they need to go much further, or was this really about a couple of banks that had management problems?
If we're in the moment of we don't know, for every single meeting of the last year, that meant hike. Now, does it mean pause? That's what I'm trying to work out. They're in the risk management business. If you don't know, is the prudent course of action on May 3rd, if you don't have sufficient information, to pause, to wait?
Yeah, that's kind of the decision they're up to now. Jim Bullard wants to go all the way up to close to 6%, but most of the others are in the 5.1% cap. That's the median, which would be one more move. And their modeling has told them that that is probably where they need to be. You look at the statistics, and the Fed has always raised the Fed funds rate above the level of inflation. When we've had a situation where they're trying to bring inflation down, and they've just gotten even with it now, basically, if you're looking at the PCE numbers. So one more move would make them more restrictive, and they probably at that point will start thinking about the idea of a pause.
It's just not simple anymore, though, Mike, because Fed funds alone doesn't tell you about how tight things are, because now it's Fed funds plus banking stress, which was clearly the direction of travel at the last Fed meeting.
Yeah, it's something you have to add into the discussion because the Fed is also looking at the cumulative effect of all of the rate increases that they've done. You don't buy a car every day, you don't buy a house every day. Companies don't decide to invest in a plant or additional software every day. So it takes time for all those decisions to be made and play into the economy. So sometime starting in the second half of this year, the feeling is we're going to see all of that hit. And if we see tightening credit conditions on top of that, it even makes it more difficult to see strength in the economy going forward. That's the argument of the people who see recession ahead.
Mike, you know how I feel about your interviews with the Federal Reserve. Just second to none. Fantastic. Looking forward to this conversation in about 5 minutes' time. Michael McKee sitting down with the Cleveland Fed President, Loretta Mester. Lisa, you're going to love this quote. It comes from Connor Sen of Bloomberg Opinion. The economy is guilty until proven innocent in the eyes of fixed income investors at the moment. Doesn't that capture things?
Absolutely. They see this economy as rapidly slowing and decelerating. My question is, we keep talking about the Fed being more concerned about inflation. When do they start getting more concerned about the fact that unemployment can take on a life of its own?
Payrolls coming up on Friday. Coming up on the Open in the next hour on Bloomberg TV. Matt Miskin of John Hancock Investment Management. Andrew Slimman of Morgan Stanley. Marilyn Watson of BlackRock from New York. It's good to be back. This is Bloomberg.
typically between the time you start and they get out in the farmers' fields is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Bloomberg Surveillance, Lisa Bramwitz and Tom Keene, John Farrow preparing for the next hour of festivities here. And it is markets on the move off ADP data. They moved earlier and then moved ever more so on a weaker statistic. And Lisa, a 2-year yield from a 4.10 blowing through the recent support. And technically it's 3.76% on the 2-year yield. I would suggest in the recent weeks and months, this is new territory.
It is right now the lowest, if it were to close here, since September of 2022. It raises this question: what is the bond market that other asset classes haven't woken up to yet, and the Fed officials themselves haven't necessarily seen?
Everyone will get out their Newtonian calculus today to look at that 2-year yield. They'll go to logs. Michael McKee and I we really don't do that. Bramo doesn't really do that. But someone that can go to logs and look at the rates of change of our economy is Loretta Mester of the Cleveland Fed. She is definitive in mathematics out of Columbia and Princeton, and joins our Michael McKee here at our world headquarters. Michael?
Thank you very much, Tom, and we'd like to welcome Cleveland Fed President Loretta Mester to our viewers and listeners worldwide here on Bloomberg. Tom said you're the math expert. You look at the ADP numbers, we might as well start with that because it's just out 145,000. I know there's questions about their methodology or what it means, but what do you take away from it?
Well, we have to look at all the data. So that's a data point that we're going to look at. We're going to get the employment report on Friday. So there's just a lot of data coming in, and we're going to use that to assess not only where the economy has been, but where it's going. Because as you know, it's about where the economy's going that's really important for setting monetary policy.
Well, that was one of the questions that they were just asking me in the surveillance studio. How do you know what you're looking for when the data are in the rearview mirror?
Well, the data in the rearview mirror is important because it tells you something about where the economy is going. So you don't throw that data away, but you also have to do a lot of other kind of reconnaissance. So, the nice thing about having Federal Reserve banks across the country is that we can talk to contacts in our districts, whether it be labor market contacts or business contacts, to really find out what's happening on the ground at the moment. And that information, anecdotal information, is very helpful as well. And then we do surveys and other kinds of more timely information. So all of that goes into sort of formulating monetary policy. So I think it's wrong to think like, oh, we're looking only in the rearview mirror at data that's from a month ago or 2 months ago. That data is actually helpful for looking at trends, and then we also augment that with other data about what's really happening on the ground, on Main Street, for businesses that have to cope with this economy.
Well, what's happening on Main Street? But it's kind of two parts. In general, what are you hearing? And then what are you hearing from bankers in your district about credit quality?
Right. So credit quality is still fine. Bankers are telling us that that isn't really a problem. It might have ticked up a tad, but it certainly is still low, very low by historical standards. So that isn't a focus now. The bankers have, struggled with retaining deposits during the March tensions in the banking industry, but has stabilized since then. In terms of credit standards, they had already been tightening credit standards as interest rates went up. So they're continuing to do that. They're continuing to monitor, their customers. They're continuing to monitor going forward in terms of making sure that they're well positioned for the economy with higher interest rates. In terms of the businesses themselves, of course, they are preparing, right, for, I would say, some slowdown in the economy. But a lot of the firms are still telling us that their conditions are still pretty good. They're worried about the economy in general, and so they're being a little defensive now. Some pullback in some of their investment spending. But again, it doesn't feel like everyone thinks that we're going to have a deep recession. It's just they're trying to be more cautious so that they're well prepared for whatever happens in the economy in the future.
Well, the recession argument that a lot of people are making sort of depends on the idea that the full weight of all of the cumulative weight of your rate increases hasn't hit the economy yet. Plus, we throw in the banking, maybe tightening credit standards a little more. Are you worried about the second half of the year?
Well, I do think that growth this year is going to be well below trend.